Hello everyone. So today we are going to discuss another penny stock which is priced at 2 rupees per share. If we look into the brief introduction about the company, so company is basically in the business of trading. I would say that is in broking of shares and financing and other related activities. So the company has various services like trading, mutual funds for child education, insurance in two wheelers and life insurance, medical and travel insurance, research, IPOs, like research, like typical market reports about the market sizing and all those reports for the company that want to enter into any particular business or for portfolio restructuring. An IPO company also helps bank to apply an IPO through UPI or banking system. If we look at the segmental revenue, so the company is having from broking service, they are receiving around 55% of the revenue, remaining 17% from financing activity and 28 crores from other activities. Looking to the market cap, so the company is having market cap of around 181 crores. So the company is a nano cap company. Stock P is around 17.5, which is around, like, if we say see at the 17.69 is the peers PE. So the company is having the PE of the company are in align with the PE of their peers. So that is a good factor. If we look at the book value, so the company is having a book value of 2.52 rupees, which is more than its current pricing. That is a good that would be a tick mark. If we look at the ROC, so ROC is around 6% and the RO is around 4.5%. Looking to the various factors like profitability, so the quarterly results are one of the best quarter results the company has posted in December 23 of 48.81 crore rupees, and the net profit has been on 2.66 crores. But the issue, if we look at the yearly results, so in yearly results, the TTM trailing 12 months or the revenue run rate is around 160 crores, which is giving an operating profit or EBITDA of 16 crores. But see, there is an issue with this, that the in last I would say 4 years of time, the company has given more than 30% of the EBITDA, but in current scenario they are giving only mere 14% of EBITDA. Or that can be various reason, because of the share market fluctuations and the other services which the company has been offered and not prevailing well, and that could be a reason why the operating profit margin has taken a jolt, and the profitability has obviously not as expected with the turnover or aligning with the turnover, because see, the company is having 51 crores of turnover and having 15 crores of profit. Now the turnover has increased to double, but the profit is still same at what it was in March 23. So the profitability margin has taken a jolt, and EPS obviously remains same at 8.11 per share, at 9 crores of net profit. Looking to the sales growth, so the sales growth has good returns in 10 years, 3 years, and in 12 months time. However, the profitability has always given a the company has given a good profitability growth in 5 years time, in 3 years time, in 5 years time, 3 years time, and last 12 months. Looking to the ROE, so ROE is not decent enough. ROE is less than 10%, so that would not be something which we consider or take it as a competitive advantage for the company. Looking to the equity structure, so the company is having equity structure of 84 crores, and the reserve the company is having is around 127 crores. So the company is the one thing which we considered and which we treasure a lot, which we appreciate about the company, that the company is having trade payables of 75 crores. On the other hand, the company is having trade receivables of only 12 crores, mere 12 crores. So the company is having surplus, and the company do not have to block their working capital, or we would say that company have no working capital right now. Company is no requirement of working capital, and that is why the company have the sound and very effective working capital management. That is, and which obviously, if we dig deeper into it, and if we look the cash from operations, that can easily be resulted. So that is the reason why they are having such a tremendous cash flow of more than 100 crores in 4 years, for 4 years in a row. And obviously, if 150, they are having 153 crores in September 23, that shows that the company is having nearly 80 to 90% of their market capitalization. So the cash is not an issue. Obviously, the company is in business of trading and finance. So obviously, that is a business which is which requires a huge amount of cash. And I think that that is something which we consider and treasure a lot. And obviously the because of the profitability margin or the something which has taken a role. So the company has done initiatives like company has given a short-term loans of 126 crore rupees, which will eventually result in the finance income as well, which we would like to see, or which we will see in the quarter, in this quarter results of this quarter, which if published I will post a video of same as well. However, looking to the other factors like the cash from operating activity, so the cash from operating activity in this sector is -5 in this business. But if you uh, dig deeper into it, so you get to know that the company has the cash from operation has negative because the company is in the business of financing as well. So any loans or advance which company has given, that would not be shown in the sector of cash from financing activity, but that is being shown that that is below the cash from operating activity as well, because that is the operational part of the company, because the company is all involved in the financing activity. So like bank have the operation of like lending money and accepting deposits. So similarly the case with this company as well, that the company is in the business of advance as well. So the advancing any cash is also covered in operating activity, and that resulted in the uh, cash from operating activity to -5. But that would not be an issue because obviously the company has given advance. So if an advance is given by company, so that does not mean that the company is not having a cash profit or something. So cash from operating activity in this case is decent and no problem about it. uh, if we look at the cash from financing activity, so company has received a borrowings of near 1.71 crore rupees. That is, so the company is having a cash flow of more than 15 crore, cash of more than 150. I would say 53 150 crores. So the company is having a cash equivalent of 153 crores, and that would not be an issue. So the one of the good thing about the company is that the company is having a debtor days of 28 days. On the other hand, the days payable of around 1080 days, and that is the reason why the company have cash conversion cycle of less than 1 day, which is so the how sound and effective the working capital management company is having right now. And that is another tick mark or the positive sign of the company. But looking to the promoter stake, so the promoter are not having that much stake in the company, and they are having around 25 to 26% in the company, which shows that the company is totally, I would say, that financed, or the company is totally in the hand of public sector, public or retail investors. So that is the reason, and that would be reason why the company's pricing has not been at too much high or too much low, or but the company has if we look at the price pattern. So the company has reached its peak at 8 January, around 4 rupees per share, 3.85 per share, and now it is trading at around 2.15. So the company is on downside from the it peaks at Jan 24. So I think that we have to wait for the quarterly results of March 24 as well. And obviously, if we look at the data of 3 years time, so the company is having this type of movement always in 14 Jan 22, adjusted with all those bonus and right shares. The share price is assuming to be around 6.15 rupees in Jan 22, and consistently has reached its lowest point or the support level of 1.65 in March 23. So the company is on the consolidation phase for a long time, and again the company has show some momentum in March January 24, but again it come to bend down to the 2.15 rupees per share. So I think that with a company like this, obviously if a company is having a nano cap of market cap around 200 crores and the pricing around 2 rupees per share. So the uh, s- uh, so obviously I would say that the investors or the retail investors often prefer to refrain themselves from investing in the stock, and there is some downside as well. There is some positive sign as well. If we look at the stock which is trading at 2 rupees per share and still profitable, so that is another positive side. On the other hand, the company is very very the company is having a market cap of 181 crores, so the movement is obvious, and the company moves to 50% up or 50% down. That can also be a case with this company like this. So that is the reason why the company is not showing too much momentum or too much upside in the 3 or 6 months of time. But the numbers are not bad if we look at the pricing of 2 rupees. And also, if we look at the other factors, so the company is having few positives and few negatives. So I would say that this is a good video to make you understand that what are the things that a company are nailing at, and company is best at, like company is good in workflow cash flow management, but the company is not giving an ROE or ROC of more than 10%, and the promoter holding is around 26%, and the retail investors are something are pro, something are not pro, or something are good, something is not in favor. So accordingly, that you can watch this video and you can understand on how the company, how the financial state, how to analyze the financial statements before investing into stock, how to read the financial statement, and with this you can easily you can easily screen, or you can easily trace any company and their data. You can easily understand how the company performs on the basis of only their financial statements. Obviously, there are other factors that are also required to understand the company financial position and the prospects of the company. But this is an I would say this gives you a broad overview about the company and the prospects and the company's competence, what are the company in which the company is aiming at, and this is how you can develop your idea on reading financial statements. So, from my side, I would say that I'm not giving any portfolio services relating to investing into stock markets and all those things. So, before investing into stock markets, please consider your financial advisor. And I hope you find this video informative and you enjoy this video. Thanks for watching.